Exponential, a decentralized finance, investment discovery, and risk assessment platform, raising $14 million in seed funding, led by crypto-focused investment firm Paradigm. Their tools help users assess risks in decentralized finance and compare investments. Joining us now is Driss Benamour. He's Exponential.fi CEO and co-founder at the firm. Welcome, Driss, to the show. So, I got to ask, because, it's happening right now, but, how would Binance Smart Chain be figure in your risk assessment tools, and if so, did you ever see this hack coming, or, these security risks?
Well, very timely question here. So risk is hard. Let's start with there. And I wanted to talk a little bit about how we think about risk. So risk in DeFi can hit you from anywhere, basically. So black swan events are there. And the way we think about risk is focusing on structural issues, facts. So has the protocol been audited before? And has it been hacked before, and so on and so forth. And based on that, we can figure things out. With respect to Binance specifically, that was not rated in our platform. However, our framework would have caught some issues like lack of decentralization, for example, if we had rated it in there. We focus primarily on yield generating protocols, which wasn't in scope here.
When one looks at total amounts of dollar value locked, it's been on the downtrend since the spring, and particularly over the last month or so, as rates have risen and inflation has gone up, it seems that people aren't putting their money in DeFi the way they were before. And also, obviously, the loss of UST really put a damper on everything, knocking a huge part of this industry out. So what do you think, what's your pitch to investors when you're raising money? How do you explain, first of all, the path that you see DeFi taking post-UST and post-interest rate hikes? What does this world look like when you're competing with the Federal Reserve for yield?
Well, the first thing we believe in is DeFi as an ecosystem. It is designed right. It is designed to provide investment opportunities that were previously reserved to banks, to individuals. And fundamentally, we believe in the design of DeFi in the long run. And from there, we are here to help people design stuff the right way. And that's why we created this framework, because it helps uncover issues and set the bar in terms of design going forward. The ecosystem, we believe, is here to stay and requires essentially a platform and a framework so that risk can better be understood, protocols can be designed, protocols can be improved. And this is a discussion we're having to date with protocols. So as soon as we've launched, we've gotten a bunch of outreach questions on how can we improve? And so on and so forth. And we're having these productive discussion that are beneficial for the ecosystem in the long run. What we believe,
Yeah, but in terms of how the market views long term, is it that how do you view rising rates? How do you view the rising rate environment in terms of the willingness? Obviously, banks, for instance, love higher rates because it changes their balance sheets in terms of their liabilities and assets and what they have to pay versus what they take in. But what happens in DeFi in a rising rate environment, and what does it mean for your prospects for growth?
Yeah, so we are a technology platform, and what we believe in is the DeFi as an ecosystem. So our goal is to be the gateway to access DeFi. So whether rates are rising, going up or down, we believe in the long-term prospect of the technology itself. And we are building a technology platform and an access gateway so that people can access yield available in DeFi in the short and long term.
I'm curious how you would assess sufficient decentralization and what your mind would not be sufficient decentralization. And I guess what are some of the greatest risks when assessing these DeFi protocols? I hear some of them, maybe running their servers on, AWS or something like that. But, I'd love to hear your security assessments.
Yeah, so we look at thousands of risk vectors, and fundamentally, the way decentralization is simple. It's about concentration of vote. That would be one metric we look at. And what we do is we audit the code, the way facts, whether the protocol has been audited, whether the protocol has been hacked, and so on and so forth. And from there, are able to aggregate that into a risk rating, and so on and so forth.
What about the greater security risks of DeFi platforms?
Yeah, so DeFi as a nascent ecosystem is inherently more risky. So our goal is to tell you whether one thing is more risky than another. So our grading system goes from A to F, and so we're able to tell you, we're not able to tell you which things will fail or when, but we were able to tell you which things are more likely to fail. So our system is about probability of things happening. The other thing we've done is DeFi is a maze, and that's an important point in terms of security. So everything is interconnected. So you may be investing in one protocol who's dependent on another protocol who's dependent on another protocol, and now you have compounding risk. So what we do is we created what we call a DeFi graph, which maps these interconnected dependencies so that when we change a rating on one thing, it trickles down throughout the ecosystem and surfaces these issues to the user through the risk rating.